Charles Schwab Corporation, NYSE, SCHW, stock rose 1.70%, as on July 19, 11 hours 48 minutes and 29 seconds AM UTC-4. Source: Google Finance, after the company posted better than expected results for the second quarter of FY22. The company's net income for the second quarter of 2022 was a record $1.8 billion compared with $1.4 billion for the first quarter of 2022, and $1.3 billion for the second quarter of 2021. During the quarter, acquisition and integration-related costs and the amortization of acquired intangibles totaled $94 million and $154 million, respectively, on a pre-tax basis. In addition, the company's second quarter of 2021 included a charge of approximately $200 million, or 10 cents per share, regarding a now-settled regulatory matter. Moreover, the clients opened 1.0 million new brokerage accounts during the quarter, and we ended June with 33.9 million active accounts, up 5% year-over-year. Additionally, while the core net new assets, NNA, that clients brought to the company during the quarter were impacted by the record tax season outflows the company experienced in April, the $73 billion in core NNA that came in between May 1 and June 30 represented a continuation of the 6% annualized organic growth rate the company achieved during the first quarter of 2022. The company ended June with $6.83 trillion in client assets versus $7.57 trillion a year earlier, which helps illustrate the extent of the market valuation pressures clients are facing even as they've added more than $480 billion in core NNA to their accounts over the past 12 months. SCHW in the second quarter of FY22 has reported the adjusted earnings per share of 97 cents, beating the analysts' estimates for the adjusted earnings per share of 91 cents, according to the Zacks consensus estimate. The company had reported the adjusted revenue growth of 13.1% to $5.09 billion in the second quarter of FY22, beating the analysts' estimates for revenue by 1.01%. Net interest revenue was up 31% from the prior year as higher interest rates and client cash balances more than offset the impact of softer securities lending activity. At the same time, asset management and administration fees were essentially flat due to weaker equity market valuations, and trading revenues were down 7% largely due to changes in the mix of client activity. Further, the other revenue line included $37 million in pre-tax gains related to the sales of Schwab Compliance Technologies and a small business investment,